All right, welcome back. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Do not invest anything you're not willing to lose or lose sleep over. FOMC next week. Rate decision. Let's take a look at the calendar. So, the past few weeks, the market has bounced. It has the Santa rally, end of the year Santa rally. That's what they call it. Why? No good reason. Okay. Powell was extremely hawkish last unscheduled conference or meeting. Basically doing word of mouth, for the markets, for anticipations, Fed speak. The market took it as bullish, and it rallied a decent amount. About 17% from that low on the S&P 500, around 3,486. I think it's over. Okay. I added more to my volatility and short positions last week, and it's down since then. This is a weekly chart. Each candlestick's a week. So the market, I guess, took the smallest thing. They'll grasp at the smallest straw. That he said that rate hikes are gonna possibly not be as extreme, like 75 basis point. Next one is probably a 50. But everyone, that was priced in, I believe. And then it was something like he'll hold rates higher longer. And also the jobs data was, according to their numbers, really good. Maybe the market saw through that it's really all just part-time jobs. There's a bunch of news coming out with layoffs starting and during the holiday seasons, right? Which is never heard of. So that means things are really slow. I mean, sales are up, but again, that's because the cost of things cost more. And shoppers are going into debt to buy Christmas presents. Listen, another reason why the market may have rallied is, one, oil has been falling. Two, China news, like they're reopening. But they've done this a couple times now. And we'll see. I have some to show you guys about that as well. So I see this as a bear market rally, bull trap. And it was sort of rallying into this death cross up here on this weekly chart. Now, this week coming up, so you're going to watch this Friday. Next Tuesday and Wednesday is the FOMC. But it's also the most important thing, I believe, is the CPI data coming out. Where is it? Export prices month over month. Imports for the U.S. So, what are the projections? It's not here. It's weird. It doesn't matter. I thought the CPI comes out right before the rate hike decision. Because it does. Oh, core inflation rate year over year. Core inflation rate month over month. Inflation rate month over month. So this is and then CPI. So all the inflation the inflation rate is coming out on December 13th, Tuesday, I believe. And then the rate decision next day. I think inflation's still running. I mean, again, I don't trust their numbers, right? But it has to be around 7% still. I don't see prices coming down. Yeah, maybe for shit you don't need, like, but food, not coming down. Gas came down a little bit. Utilities, the cost of living, real things, they haven't come down so much. Home prices have come down a little bit, 10-20%, depending geographically where and how much it rose, right? Because some areas it went up over 100%. But used cars prices are coming down. But the data is lagging. And I would say there's at least a 3-month lag. I don't know about least, but 3 months ago, inflation was still pretty damn high. It was getting worse, actually. It's still high, I bet. Can they print like a 6-something%? Yeah. And the market at first might take that as extremely bullish, and it might rally. But I still think Powell's going to do a 50 basis point rate hike, if not more. And why is that? Well, there's a couple of reasons. Geostrategically, because we are in a form of world war, which is economic actually right now, I believe. Although it doesn't, a lot of things just don't make sense. It's clown world, but there's different factions who run the world or run their empires, whatever, and I do think Europe's being sacrificed. So. And the rest of the world. And if Powell keeps raising rates for the long term, it's good for the U.S. for numerous reasons, right? Some capital will flow into the U.S. because the dollar will be strong. Although equities are going to dump hard. But long term, it's good if the U.S. could strengthen the dollar versus other currencies around the world, stop inflation, or at least get it back down. I already see CNBC hosts posting on Twitter, oh, maybe the new normal is good, that if we stop at 4% year over year inflation. By the way, 4% is 8% year over year. So you're getting an 8% wage cut if you're like middle class. Because the cost of everything will by the way, that's 4% on top of what has already happened. So if we had 20%, so if the dollar lost pretty much 20% of its purchasing power this year, and they get it back down to 4%, then you're still pretty much have lost. By the end of year 2, you've lost 28% of your purchasing power. Almost, it's over a quarter. So it's like you got a 25 to 28% pay cut. And then the year after that, add another 4%, and that's in quotes, because really you should double it, because that's the real running rate of inflation, according to the old way they used to measure it. And that's if they could even pull that off. The only way they could pull that off is if Powell really does just come out like next week and does like a full 1% basis point rate hike, or even just a 75, and then does maybe one more if he can get away with it, but by then equity should be tanking, and then hold it there for a couple months. Just hold it there. And yeah, it's going to cause massive layoffs. Things are going to be breaking. Housing's going to, go. And it's already happening, but we're just at the beginning stages of it, really. Although we have been in a, I would say, recession all year. But that's what he has to do if he wants to keep, if the Fed doesn't want to lose complete credibility. And he even states it. He says the truth. He's pretty transparent if you listen to him. The only, the Wall Street is fighting the Fed. I'm not, right? But it's like they cannot. What is the average age of people on Wall Street is like around 30 years old, something like that. They've never actually seen an stagflationary depression, because that's what we're going to end up in. And for some reason, they just think, oh, he's a chicken hawk, and he's going to capitulate and then just go back down to zero and start up QE all of a sudden. No, if I've said this so many times, he cannot do that, because we'll just have hyperinflation. And at that point, stocks aren't going to go up anyways. Maybe like Venezuela style, but it doesn't matter once you adjust your stock valuations for inflation. No. And then corporate earnings will eventually just crater. And there's just no reason for stocks to go up. Anyways, we all know that. There was a lot more economic data coming out afterwards as well. Initial jobless claims is a big one. Retail sales for autos. Philly Fed employment. Industrial production. That's a big one. And this week I was hoping the market would sell off, and it did. It's been selling off this week. It bounced today. Tonight's Thursday. By the time you see this, it'll be Friday. And the market has sold off this week, and it was because of this week's GDP numbers for like Japan and a bunch of economic data for the European Union, all of that. And it was bad, really, really bad. And it pulled down the U.S. markets as well. So there's initial jobless claims next week after the Fed rate hike decision. And these matter more, the economic data, because the entire market rests upon one man's speech, little podium meetings. Because, by the way, when people start blaming the free market, it's not. We've never even seen a free market. Not in my lifetime. And I'm in my late 30s. So, all right. Here's what's, a lot of people are talking about. I've been talking about all year. The inversion of the yield curve. Here's what I think is going to happen. Not financial advice, but here's what I think is going to happen. The blue line with the shaded in area is the 10-year yield. Okay? The green is the S&P 500. Now you can see right here, rates have spiked, right? The blue up to 4.22%. And as rates spiked, have been spiking all year, the market's been selling off. The green, that's S&P 500. Now, in the past few weeks, the 10-year yield has dropped back down a little bit, not too much, but it dropped from 4.22 to 3.49. Now, we're going to get that rate decision next week. I think he might surprise the markets. Why? Because he was hawkish last meeting and the markets just rallied. That's not what he wanted. Because the only way inflation comes down if these asset prices come down. Like, why should all these Wall Street investors' stocks go up with weak corporate earnings, and the economy literally in a recession, and then they could just sell their stocks and go shopping? And this, reverberates across the entire economy. And historically speaking, it doesn't go up in a straight line. But you can see back when Volcker raised interest rates, the 10-year yield went to 15.6%. The market started selling off real early, but, you had a big spike. The market sold off. Then the yield fell back down. Then the market rallied. Then the yield spiked again and then finally fell into a bear market. If we go to .com bubble around 2000, 10-year yield spiked up here, fell back down. The market went back up, new all-time high, and then finally started crashing. And then yields fell. Here's 2008. But you zoom out, you can see it right here. 10-year yield was steadily rising since 2003. And the market went up that entire time. These were very small rate hikes, and there was more free market pushing up the yield. The market sold off. Yields bounced, went back up. Well, the yield dropped, and then the market did a little dead cat bounce, bull trap, and then the yield spiked back up, and then we had the final crash. And I'm going to show you guys some housing data and all kinds of stuff because it matters. So, during the .com bubble, the entire bear market was fell 43%, give or take, a little bit. On the S&P 500, 54% in 2008, mortgage-backed security crisis. Funny thing, in 2018, Powell started raising rates, and then Trump got on him and told him to stop because the market started tanking. And that was the beginning of the popping of the everything bubble. But it was stalled because it literally told Powell stop raising rates, put him back down to zero, and he did. And the markets went back up. But that drop was 20%. It looks small, in the grand scheme of things, but it was a 20% drop right here. Or no, that's COVID right here. So you see how rates started rising from 1.36. Then the market finally dumped when rates got up to 3.2 on the 10-year. Then Powell stopped raising rates. That's when the bubble really popped. But, he lowered rates. Rates fell, crashed this hard. and it gave the market a little bit of a boost for like another, from December 2018 to right before the coup, right? And then the markets crashed. So yields were dropping into the run-up of the beginning of 2020. And then the coup happened, and then rates dropped with the market. And then ever since then, it's been going up. As you can see right here. The current correction so far, or the low for this year, and it feels so painful for everyone because the real economy is in a recession. That's why it feels so painful. But and individual stocks are down way more than 25%. But the indices are still up. It only fell 25%, and that was the low. Currently, the market is up. Currently, the market from the all-time high has fallen like 15%. Maybe 17, give or take. The bear market's not over. This is not how you end bear markets. And it's getting bad out there. I mean, it's you could tell. There's less cars driving around. Less shopping carts are full. Mortgages, we're going to take a look at that, are just through the roof. Let's finish up with charts and I'll talk about some stuff and show you guys more stuff. Here's gold. The orange line is gold. The yellow line is tips, inflation adjusted bonds. That's what they're supposed to do. Like, they're supposed to be a hedge against inflation, but they're not. They're not working properly because they're manipulated. The blue line is the yield, the 10-year yield. And you can see there's the 10-year yield dropped in the past 7th, about 1 month. So the 10-year yield has been falling for about 3 to 4 weeks. And gold actually popped. I cannot get it back. Well, you guys saw it. I'm not sure why my chart isn't working. Oh, there we go. Let me remove the tips. Oh, there we go. So gold popped back up as the 10-year yield dropped in the past 3 weeks. Is this a bull trap for metals? Yes, and I think it's like the last one. Bull trap. Because yields are going to go they're going to spike back up. Maybe not make all-time highs on the 10-year yield. But when it does, that's when it's going to get real interesting. So why would that even happen? Why do I think that's going to happen? Just like one more spike back up. Well, for one, if we zoom out and look at this chart in the grand scheme of things, here's 1971 all the way back here. You see this line, this dotted white line? That's when we came off the gold standard. And then we had massive inflation in the late 70s into the early 80s. And that entire time, Paul Volcker's raising rates, like the short end, the 3-month, to like 20-some%. We can't do that today because of the amount of debt outstanding and the leverage and the lack of industrial production and real economy. So the rate going up to 4% a little higher, 4.2, right? Today is kind of like the equivalent of it going up to like, I would say 12%. Kind of, near the Volcker hike. Because of the surmounting, like the insane multiples of debt. But that said, we printed 40% of all dollars into existence in the past 2 years. It's probably more now. And yes, there is a lot of dollar demand globally, the milkshake theory and all that. But if inflation runs out of control, that's it. The music stops. They can't do anything. The Fed loses all of its power overnight. His number one mandate is supposed to be price stability. And again, I've said this, they were too slow to start raising rates. And when they did start raising rates, they weren't raising them large enough. And he has to crash the economy, really does, to stop this inflation. And why is that? Because of government policies, like in the West, Europe and the US. That you can't have low inflation if energy costs a lot, because the entire economy runs on energy. And they're doing everything in their power to destroy cheap energy. They want carbon, zero. So that's inflationary. On top of that, there's still fiscal spending that's out of control. People are still getting unemployment. Stimmies are gone, but unemployment's still there. California is out of control. I'll show you guys more of that. They sent out inflation relief checks. That's inflationary. So gas went up there, but in the grand scheme of things, yes, the interest rate is high. If you compare it against the amount of debt outstanding and the money destruction from rates going up, it amplifies it really. It's really up here. If you were to compare it back then. Okay? And inflation is also running higher than back in Volcker days, is because if you adjust the current inflation to the way they used to measure it back then, like I said, we're running like a 20% inflation. It's higher than back in the 70s, or just about the same. And then guess what happened back then? Gas shortages. But it was a different economy back then. It was more manufacturing based. It wasn't financialized. There wasn't this much debt. There wasn't this many nonsense bullshit jobs of like paper pushers and waitresses and baristas and shit. And all the U.S. is just covered in giant like Amazon warehouses. And Amazon's struggling now too. Anyways, during the holidays. Okay, so there is a lag effect of the rates going up. And that's really going to hit like in about, I would say, this winter and then going into spring and summer. So the rate hikes that have happened so far this year, the bulk of it, like the big hikes, the 75 and I think there was a 1% hike, those are going to hit in the next like few months into spring, like affecting the economy and everything. I mean, it's already starting, but it's not over. But he still needs to like get the market back down. And I think he's going to do 50, worst case, or at least. But he might surprise the markets with a higher 75 or 1%. 1% is too much, but a 75, because he has to get the markets back down. And let's just say this. That is, it strengthens the dollar against foreign currencies around the world. And it assures that the U.S. coming out of this global depression might come out the strongest. Now in the long term, but for the intermediate, like next 4 or 5 years, the U.S. could come out the strongest because it really blew up the rest of the world's economy, especially Europe. And Europe's like the sacrificial lamb. And then capital will continue to go to the U.S. and the dollar remains world reserve king because the Fed was the first to raise interest rates. Now this does create the milkshake theory, which does bring me back to the DXY. It's right here. And DXY has really dropped. Also gave a little boost to metals and whatnot, but support is around 103. I think it'll bounce and go back up. Will it make new all-time high? I don't know. But if it just bounces and goes back up to like 110 or 8 or whatever, then the 10-year yield will spike a little bit and go up. And then after this rate hike, which I think is a 50 basis point, but it can be a 75 basis point if inflation is running, even if it's running like at 6.5%, that's still way too high. And it's not that it's too high, it's that it's been high all year. And in the long run, inflation destroys the economy more so than raising rates and destroying all the malinvestment that's been happening for like a long time now, over a decade. You could say a couple decades, but do you understand? Like, if he doesn't at least get inflation back down to 4 or 3 whatever percent, and then he pivots, he can't do this again because it's not going to work. Because if he has to try to raise, like it didn't work the first time, and inflation just got out of control, and he went back to doing rate hikes, he would actually have to raise rates like past 10%. And he can't, because at that point, like unemployment would be like insane. You would get, I mean, the banks will stop working. Okay? Like, that's it. Like, that's pitchforks and who knows. Like, banks stop working. Every company goes under. So he can't screw up this time. He has to make sure that inflation is at least stopped or slowed down to like 4% worst case, and then like hopefully back down to like around 3% at least. And here's why he's going to do that. This is what nobody talks about. Why is Powell going to be able to do this? Or why is he willing to do it? Well, one, his legacy. Two, he could screw up in one direction, but he can't screw up in another direction. So if he doesn't stop inflation and he pivots too soon, he can't come back from that. Because of what I just said. So if he doesn't stop inflation and pivots too soon, he cannot come back from that. That's endgame shit. That is totally endgame. Bond market blows up. That's it. Like, it's Armageddon. We're going into hyperinflation. But if he just crashes the stock market and the economy and assures that we not only stop inflation, but we have maybe a short period of time of deflation, he could always just print more money and then just reinflate it if it's too painful. If it's too painful, he could reinflate it. But if he screws up and pivots too soon, he can't go back and try to raise rates again. It'll be too late. It'll be like he lost credibility. And shit is breaking just from inflation. At that point, it's like no return, in my opinion. Because you just went through a massive inflationary spike. Then you put the economy into a massive recession, depression. but you didn't put it into enough recession, depression to stop inflation, and now you're stuck because you have to lower rates and do QE, because if you don't, like, the mob's coming after you, and then he pivots, and then all of a sudden, within a few months or something, inflation not only comes back, but makes a new all-time high. Then what does he do? Does he try to raise rates again? Because the economy would still be weak, and he couldn't. Do you understand what I'm saying? He has a one-time shot at this. He could raise rates too high and come back from it. What he can't do is pivot too early, because he can't come back from that. And this is what, like, nobody is saying or understanding. He literally said this in his meetings, and it's like no one's paying attention. All right. I just want to look at Tesla because my twatter was deactivated last week. You can still go to it. You can still view my profile, and I would really appreciate if you guys actually did that and like a bunch of my posts and retweet them so we could screw with the algorithms. And this is after Elon takeover. I've tweeted 16,200 times, and I reached 2,700 followers. How could I either really suck ass, or I've been shadow banned this entire time, which I have been. I know I have, because you could look it up. So, you know, go to my profile, view it. You can still view it. I'm following 0 people. Don't know why. Guess they removed all my follows. And just go down my Twitter and like everything and share it. I'd really appreciate it. I want to get my account back. But I am going to make a new account. I'll post that in the free Telegram newsroom and everywhere else. My new Twitter account. And you know what? I wouldn't be surprised if that account within like 6 months has more followers than my old account that I've had since 2016. And I tweeted over 16,000 times. Because the shadow banning is it won't be on the new one, unless I have my own personal agent follow me, which I probably do. But I'll digress. All right, so I also want to talk about this. Millions in the UK. This is Rebel Capitalist. Great channel. I post them all the time. Millions in UK say they can no longer afford heat. Well, that's because your leadership. You know, he just wanted to take half the country, and they're all ethnic Russians. But I guess Europe's willing to implode. It's willing to destroy themselves. But it's not just that, it's the cult, guys. I mean, they want zero carbon. They want you poor. They want to destroy the economy. Because I think they're just psychopaths. They're not just stupid, but they're in a cult. I don't know, guys. Nothing they do makes sense. Like, even if they wanted absolute control over everyone and serfs and this and that, like, what they're doing isn't going to achieve that. It's just going to achieve a lot of misery and horrible collapse, which they're not going to be able to control whatsoever. Most of the power structure everyone sees is really just security theater, and it's 90% of it's based off fear. Because they're so outnumbered, and most people aren't willing to go along with any of this shit anyways, or they're already all fed up. They're just doing it for a paycheck. But at some point, once you have no energy and you have hyperinflation, no one's going to do anything for a paycheck because it won't even be worth it. And that's what's going to happen in the end. A good example of that is also China. And I want to show you guys this. I like these two. These two guys have lived there, and they rode their motorcycle across the country. And they had a good, I don't want to get, hold on. Is this going to load or what? They have the ADV China channel. It's not loading. Piece of shit. And I just want to show you guys a few things. Another ad. I bet they're struggling. So, where is it? It's like halfway through. Besides the welding people in their houses and beating them up and everything, I want to show you the scope of this. You guys should watch this. Here we go. Look at the scope of, and they're everywhere, outside of every major city. And this, guys, it's been 3 years. 3 years. And this is nothing to laugh about. This is horrifying. And I feel for these people. They've been living in hell. And this is what you get when you get hive mind groupthink. And but I want to show you, this is what's really just insane. And it's become a business there. So they're commercial real estate, like the ghost cities, and their housing bubble has collapsed. And their manufacturing is, I guarantee you, not even at half the output. Because U.S. has slowed down buying Chinese trinkets, right? And things. Although they do make some good stuff for good prices. Like I bought a laser pointer and it's like freaking awesome. But and it was built there. This is their new economy. Like a huge portion of their GDP is literally people being put in little tin boxes, and they have to pay for it out of pocket for living in a shipping container, smaller actually, and being incarcerated essentially for no reason. I guarantee you, we all know why. There's no reason. But this is a business now. It's like the private prisons in the U.S., right? It's a huge business, and they're just making money off of locking people up. And they have to pay for, like, rent. And, of course, this ties into the social credit and all that. But this is no different. This is modern-day gulags mixed with Blade Runner technology, which the cult, right? They want this globally for the sheep. They want you eating, pesticide covered bugs, and then none of this shit's gonna happen. That's why I don't even I'm not even afraid or worried about even talking about it. I mean, some of it may happen, but I think it'll all collapse. Like if they're successful, it'll last a couple weeks, and then the pendulum swings again. Right, but I mean, this isn't it's fascinating the amount of cranes all at once. It's like they're building them as fast as humanly possible, and everyone's just been locked up for 3 years, just off and on, off and on. It's like boiling the frog, right? Insane. Now imagine what would happen if they lost control. Which is a high probability, because they're starting to actually get famine now, no food, and So, what another question is, if they're opening up, why are they building more and more of these? Good question. Probably because the U.S. isn't going to be able to. Where's the demand going to come for all their production if the global economy is slowing down and going into a depression? By the way, the last mortgage-backed security crisis, China pulled the world out of it, out of that recession. Well, who's going to pull the world out now? Nobody. All right. Let's talk about home mortgages. Here's the 30-year fixed rate mortgage average in the United States. If you want to go and get a 30-year fixed, it's at 6.95, all-time high about 3 weeks ago, and it's currently fallen down to 6.3. So I would say upper middle class and above, like, you know, you maybe got a few mil or whatever. They went out and they bought homes this on this dip in the past week or two, but this is short-lived. I believe the middle class and below, they're priced out. They're priced out until rates go back down to zero. And even then, they might not be able to afford a home just because of the maintenance costs going only up, taxes going only up, energy, utilities only going up. So, but yeah. And if the 10-year, so if Powell raises 50 or plus next rate hike, and then maybe one more, he gets away with one more, Q1 of next year, and then he keeps it there for a couple months, which I don't think he'll be able to do all that, but, you know, maybe he'll get like a month into next year and one more rate hike, maybe. And then it'll probably pop all the way up to, on the 30-year, like 8%, maybe 9%. And during the 2008 crisis, the 30-year fixed hit 2007 hit 6.52. So we're right there. We've actually hit a little higher already. So one would say, yeah, but you know, we don't have a housing bubble like that, like back then. I would say no. I would say yes and no. It's like a different type. I would say we did reach prices that level, like increases in certain areas. And yeah, it's not as systemic and not as widespread, the housing bubble, but there's other things going into this. Boomers are retiring and they're getting older, and the cost of maintenance for a home and keeping it, and then their fixed income from pensions and Social Security, that's not going to be enough for them to keep their homes because of the high inflation rate. Again, people keep thinking inflation is going to go back down. It will temporarily, but a lot of prices are never going to go back down. The size of your food that you buy is not going to go back up. The shrinkflation. I just went and bought like organic cereal that I always buy. It's like granola packed with protein and like some dry fruits. It used to be a decent sized bag. Like I could hold it in two hands, you know. It was a decent sized cereal bag. Now it literally fits in the palm of one of my hands. Like so it went from like 10 servings down to 2. Okay, that's not going to change. Maybe the price will come down a little bit, like 30% or something, but I'm not going to get the original size of my food back. Like the shrinkflation really only goes one way until like a very long time and inflation's completely wiped out, like a new currency reset happens. So, yeah. Anyways, what I'm trying to say is a lot of retirement coming on deck here, and I believe there's still a ton of more homes. I was listening to a Twitter Spaces from Wealthion, and there's a bunch of new homes which still haven't come on market. So those are still coming on market in the next like 6 months to maybe middle of next year. And yeah, like prices of homes really have to come down a lot for anyone to afford it. I mean, to give you an example of how bad it is, do you think people are going to be able to go purchase homes when their credit is tapped out? They've maxed out their credit cards. And let me show you. You don't believe me. I know I always talk about this, but here. Total consumer credit. It's at all-time highs. And there aren't that much more people. So that just means we're at all-time highs. Credit, outstanding. Non-revolving credit. Revolving credit, all-time highs. The red is obviously recessions, 2008. The COOF, here's the dot-com bubbles. Not that bad. I don't think dot-com bubble only really affected people, speculators, right? Student car loans. What? Oh, student loans is blue. Car loans is red. I believe the student loans will get canceled. They're not coming back because no one's going to be able to afford to pay them anyways. Car loans, a huge car loan bubble. I've talked about this. Hedgeye had a good talk about it. It's enormous. It's like, I don't want to say it's as big as the 2008 housing bubble, but it's like, even if it's just half the size, it's insane. If you look around, everyone's got like a newish car. So anyone with like a 4-year-old car or less, or even 5, they're making payments on those cars. And with the rates going up, their car payments probably like went up by a lot, like maybe doubled. And this is the future I think we're going to see, like the near future, like next summer. Just a lot of newer used and new cars sitting in driveways at home around noon on the weekdays with a for sale sign in the front lawn, and they're home all day because they have no jobs. And you'll just see repo trucks driving around hauling cars all day, every day, because that's where we're heading. Here's the state of the consumer. Thought this would blow up a little more. Yeah, I mean, this happened right before 2008 as well. And look, happened right before COVID, right? The U.S. consumer is dire and getting worse, and as shown in the next chart, credit card debt hits a record high just as the personal savings rate hit a 17-year low. The catastrophic implications for the U.S. economy is clear. Now, I remember at the end of last year and in the middle of the winter this year, personal savings was at a record high. And within 10 months, in about 12 months, it's hit record low. That is proof that inflation has skyrocketed 20%. Because that's how quickly it eviscerated everyone's savings. And not only eviscerated their savings, now they're in the red maxing out their credit cards. That's how quickly 20% inflation, because they want to keep living that lifestyle they had in 2021 and 2020. But to do so, their pay increases didn't keep up with inflation. And now they went through all their stimmies, all their savings. And to keep that standard of living, they have to go into debt. And that is entirely unsustainable, right? Yeah, it's that simple, guys. Here, around 450,000 home buyers are now underwater as early FHA delinquencies hit 2009 levels. So, how much has the U.S. population grown since 2008? Give me a second. Let's take a look. Sucks. I want like a chart. Well, it's like 331 mil right now. In 2008, we were at 310 or 15. So, what? It went up like 6%, not even. That's with all the people hopping that border. I'll talk about this in a second. So why am I even looking at that? Because if we're at 2009 levels in delinquencies, and the population's grown like, let's say 7% since 2008, let's say even 10%. This is just the beginning of the home, the bubble popping for real estate. Meaning, it might be just as bad. It just might not be as systemic where AIG and all these insurance companies go under, but maybe, I don't know. Like, we don't know. We never know until after the fact, after shit starts blowing up, to where things were insured, the collateral doesn't really exist. They chopped up mortgages and sold them around the world, and they took out leveraged insurance against it. And trust me, I know, because I actually temporarily got a job with AIG back in 2009 where they were doing some, let's just say weird stuff. But I had a little experience with that during the financial crisis. It was only for like a month, but yeah, let's take a look at this. Delinquency rate at 6 months after origination. So this is 6 months after they bought the home. It's like skyrocketing already. Yeah, everyone who just bought a home in 2020, 2021 is like getting wrecked. Let's take a look at the median home price change. So we're starting to see... So in Cali, San Francisco, and San Jose, it's like down 10%. Seattle, 8%. Phoenix, 7%. San Diego, 6.8%. 6.4% for Sacramento. Las Vegas, down 5.6%. I actually I don't know which channel I was watching, but volume of people going to Las Vegas is like plummeted. So that's a great bellwether. Or canary in the coal mine. When people stop gambling, that means they're done. Like, they've lost money to the point where they don't have any money left to go gambling or even buy a plane ticket to Vegas. Because desperate people during recessions start going to Vegas. You know, it's sad, but they do. And they can't even go do that anymore. Los Angeles, down 4.9%. So they're down, but it's, again, home prices went up like in the past decade. over 100% easy national average. Of course, DC fell the least. Wonder why. We all know why. Remote work revolution has wiped out $453 billion in commercial real estate value. That's a lot. It's almost $500 billion. And I was saying this like this summer, I noticed that commercial real estate, all the buildings are empty everywhere. So, first of all, these were all nonsense jobs. You could probably do away with them anyways. And now they're probably just all gonna get laid off. And it's easier to fire people not even showing up, right? You have no personal relationship. You don't see them face to face. How have downtowns recovered since the pandemic? Here's a bunch of cities. So you know what else could put more pressure on real estate? Well, these commercial real estate properties, they can't they're probably, what's more likely? That the economy comes back roaring and there's a need and a demand for all this empty commercial real estate? Or you just convert them. Just convert them into, condos or homes. And a lot of people, would go and live there in the cities. That would be really devastating for real estate. But I don't see these empty buildings being filled back up with businesses. Do you? I mean, this is just the beginning of the stagflationary depression. So, and there's a huge demand for housing for millennials, but the problem is they can't afford to move anywhere. Well, once the price of these commercial real estate really falls a lot, I would go and just buy up one of these big buildings, put up dividers with some soundproofing somehow, and rent it out, like cheap, below the average cost to rent, like an apartment or whatever. And then there you go. And, the more people would move back into the cities, and then with more people in the cities, more shopping, more economic activity, more stores and small businesses reopen. And I do see that happening. I've actually not heard of anyone say that or predict that. I'm the first. And I guarantee you someone's going to say this in a few months or next summer. And they're going to take credit for it. Because that's what always happens with me. Because I'm like the most shadow banned guy on YouTube, Twitter, everywhere. And you guys, I appreciate you guys, but a lot of you don't give me thumbs up or share my shit. And you dislike me. I would actually make more videos if I saw some traction, right? With my following. Twitter Files Part 2. Secret Blacklists. I guarantee I'm on that. China quietly launches QE. Beijing orders large insurers to buy bonds to contain selling panic. So, I do believe, I believe China's economy already collapsed. Like, seriously, collapsed. That's why they're still doing zero COVID. Remember, what was that big real estate company that went? That's when it started. And that was like a year and a half ago. Used car prices collapse most on record. Most on record, huh? Readers have been well informed that the used car market bubble popped earlier this year. Cox Automotive reported that its Manheim Used Vehicle Value Index, which tracks the auction prices of used cars, plunged 14% from a year ago. The index has also slid the lowest point since August 2021, as used car sales tumbled 10% in November. So I went out and I bought a used car, like, it was right after the stimmy checks went out, because I looked around and I'm like, if I don't find a good deal on a car now, I'm not going to for a while. And I was right, because it took 2 years for the stimmy checks to wear off on the used car market, because everyone got, a nice down payment, and then they went and bought new cars and newer used cars. So I beat everyone like just in the nick of time, and I got a good deal. So if you've been waiting, maybe wait a little longer, maybe midwinter, before the Fed pivot and before the next your tax rebates or whatever, and then so in about a month or two. Or now, I mean, if you could find a good deal, look around. If it's a good deal, it's a good deal, right? I'd look for a Japanese car. Not brand new, maybe a couple years old. Oil plunges into red for years despite supply shock from Keystone Pipeline shutdown. Dude, I think they're manipulating it. Here's another thing with the paper markets, right? And remember, where is it? Biden said he was going to buy back, he was going to refill the oil strategic petroleum reserve at $70 a barrel. Right now we're at 71.9. Like almost there. You see my green line? Almost there. Now here's what's funny. If China is opening up, and I really don't know. I really question it. But even if they semi-open up, right? And on top of that, we just had them, and this is my next topic. So the G7, G20, whatever, they're doing price caps on Russian oil, right? So we have that happening. Plus the Keystone and domestic production, the U.S. is screwed from all the red tape, and now there's windfall profit taxes. It's crazy. I think, can it fall to $70? Can it fall down to $65? Sure. In the next week or two, or as the recession happens, or as the stock market starts dropping massively because Powell comes out maybe with a 75 or 1% rate hike, and the CPI data is still high, right? Yeah, sure. Oil might actually dump real quick, $65 or whatever. But here's the deal. It's going to shoot right back up. Because the geopolitical stuff going around the world, right? And if China does open up, I mean, it's going to bring buying pressure internationally, globally. And, of course, OPEC and the BRICS. They're not going to go along with this. I mean, in the end, it's just Europe and the U.S. not getting cheap oil. So, we'll see. Maybe this was the plan. They planned this out back then, a couple months ago. And they knew oil was going to fall down to like $70 or lower. I was thinking it would go back up and stay, maybe around the 88, $100. And then it would shoot back up. But again, if we fall into a deep recession, depression, oil demand will come down. And that's another reason why I think Powell might do a higher than 50 basis point hike the next week, especially if CPI is still high. What if it's actually made a new all-time high? Oh my God, the markets are going to dump so hard. And oil will too. But listen, that's a great buying opportunity in my opinion, especially for the long run. Here we go. The Russian oil price cap isn't as simple as it seems. Again, any price cap causes shortages. And I think Europe's just going to hurt themselves doing this. EU G7. Yeah. I mean, they'll just sell it to the rest of the world, not a part of it. I guarantee you, once just one of these countries bail on this and they can't take it anymore, this coalition will be over very quickly. Also, Europeans are like gonna freeze this winter if it's a bad winter. And they already are forced to choose. Feed my family, buy Christmas gifts, or have a heated home. It's wild in the UK. Alright, I'm going to finish it up with this. Okay, so if you got a real nice tan, man, you could get like $250,000 apparently. They're trying to give you $250,000 in California. Now, the reason I'm bringing this up, right, is because you're going to see this as the economy gets worse and worse by buying, basically giving the peasants handouts so they don't grab the pitchforks. Another reason is to buy votes, and just the corruption's out of control, and these people are literally psychopaths. Especially this guy. This guy's like, man. Even looks like it. Anyways, what are the ramifications? Because you're going to see more stuff like this, okay? The first big one was student loan forgiveness, and then stimmy checks, and you're going to see UBI, and you're going to see different types of forms of it, or different types from different states maybe, or political leaders. And let's take a look at this one. So this one, what are the unattended consequences or ramifications of doing this? Now, let's give them the benefit of the doubt that they're just stupid. Like, this guy's just stupid. I don't think he's that stupid. I think they know what they're doing. I think it might be a trap. I mean, if you think about it, there's only a couple ways in and out of Cali. Anyways, it's in the desert, too. Anyways, one, it'll cause mass migration from different states into Cali. Two, massive inflation in California. Three, I do think this provides exit liquidity for people in Cali who were too late to get out. Because it's too late to get out now. You're not going to be able to sell your home. But now, some people will be able to if they do this, right? If people get $250,000 for free. For them, it's free. And listen, if I could take advantage of this, I would be more slick about it. I wouldn't want to go there and live there, but I'd figure out a way. Even temporarily, whatever. Just to get the cash. And that's another ramification of this. A lot of people will go there temporarily, just enough time to get it, and then they'll exit. There might be a deal, right, where you have to like stay there or be a permanent resident, which is probably the case. But there'll be people who will just, they don't care. They'll go there, get some utility bills, this and that, and then leave. So then money will exit Cali into other states, causing inflation nationally. Another ramification would be, this would really piss off a lot of people. I mean, most people can't even, they work their asses off, paycheck to paycheck, and they still can't get by because of high inflation. And now they're supporting just a bunch of people getting $250,000 for free, right? So that'll piss off people. So they're going to ask for the same treatment from their states, or they're going to complain, or they might get really pissed and just stop paying into the system. And I believe all of that would happen. So what else? One, it would cause a pretty crazy economic boom short term, temporarily in that state. But it probably, like, it wouldn't last long because the cost of the prices of everything would just explode, and very quickly that amount of money won't be worth as much. And again, it would just cause more people to flee. And maybe a lot of people would stay if they promised more of these handouts. But then, you know, no one would work. Like, why would you? I don't know, this shit is like crazy clown world. Again, I do think it's a trap. It's a setup. And we'll see. But yeah, I mean, it could like totally destroy the country because a lot of states, I mean, they would stop paying into the system, the entire system, you know what I'm saying? Because this means that other states are supporting this state. Because where are they getting all that money? Let's, what else was in the news? How long is this video? Already over an hour. Doesn't matter. On the hedge. Huge cold winter storm coming in the U.S. to next week. Vanguard quits Climate Alliance, a major blow to woke investing. Good. Like I said, guys, none of this shit is like sustainable. Go woke, go broke. And that's real. And a lot of companies are just not doing the ESG shit. It was a scam anyways. It's another scam. Virtue signaling scam. Transportation prices see sharpest rate of contraction in November. How crazy is that? Going into the holiday season, the biggest retail season of the year, and transportation capacity... Oh wait, let's read this. Transportation capacity continued to grow at high rate during November, with prices falling at the fastest rate on record, according to monthly survey of supply chain executives released Tuesday. The Logistics Managers Index displayed a capacity rating of 71 in November, 1.7 percentage points lower than the all-time high established in October. 12-month forward-looking expectations. Okay. A new low for the transportation prices sub-index was set during the month of A37. Doesn't say what month. October? So the sharpest rate of contraction we have read in the history of the LMI, the report says. Contraction was more pronounced among downstream respondents. So here's freight. FreightWave's National Truckload Index. It's, look at that. It just fell off a cliff in February, beginning of 2022. And then we had those negative GDP prints. But it like slightly went up. Why is that? Is this just Americans like ignoring their bank accounts and checkbooks and just spending no matter what? It's weird. I guess. Maybe people started shopping thinking that prices were only going to go up long term. I did that a little bit. Not a little bit, a decent amount. I bought things that I was thinking might go up in price and never come back down. People are losing faith in this institution. ECB staff threaten to strike unless pay hikes keep up with record inflation. That's right. Oh, that reminds me. There's like a Reddit movement, another one. It's like the Wall Street Bets thing, where millennials are like just quitting. It's like the silent quitting or the some boomer right now. It's like, oh, of course, millennial, get some grit. Back in my day, like, shut up. First of all, back in your day, one person had to work and they could support an entire family. One person could be a waiter or waitress, pay rent, pay off their student loans as they went to college, have enough to buy a used car, and travel a little bit and like have a little extra. Like, you can't do any of that these days because the cost of living is exploded. If I heard this, if you adjust since 1971, since we went off the gold standard, the minimum wage adjusted for inflation since 1971 is actually $50 fucking an hour. That's what it's. So anyone before 1971 in today's money would be making, like, if they were making more than minimum wage, like $100 an hour or more. If they were making minimum wage, $50 an hour. Right now, I don't know what an average American makes. I think it's like around 40, 35 grand a year. Maybe a little higher now. People got some raises, but doesn't even dent or come close to inflation. So I sympathize with millennials and younger generations, like these scumbag boomers. Listen, and people get mad when I talk about them. You understand these people do not give a shit about your future. If they did, we wouldn't be here in clown world. Another reason is they're cowards and they keep their mouths shut because the only thing they care about is retirement. And I guarantee you they're all going to vote left for free handouts and to keep the perpetual shithole system flowing, hoping they're going to get their retirement. Because nothing scares them more than having to go back to work or just, I mean, there's not going to be work for them. A lot of them are going to, like, if it's a desk job, they'll work till they probably die. But, you know. This FTX thing, I called it right off the bat. I was like, this is just like that guy with that island who happened to be some sort of weird, like, billionaire investor, but it was really just all a setup. That's what all of this is. It's a honeypot. They literally stole everyone's money and just handed it out to the clubs, to the cartel who run the world. What else is going on? There's like armed guards at gas stations. What else? So Zoltan Pozar, gold to soar, crush Western banks when Putin unveils petro gold. Yeah, I mean, this has been... I've read the stuff about them doing this or planning this, like, since 2011. It's coming. It'll eventually happen. At some point, the manipulation will break and gold and silver will shoot up, do crazy moves, and then the mining stocks will look like cryptos during a raging bull market. And that has, and the biggest move is going to come early, meaning a lot of times there's always like a blow off top and stocks and everything when they rally in a bull market. But I think the biggest moves are going to come in the beginning of the gold and silver market, because when it starts, we're going to be in the middle or the depths of the depression. And then the Fed does a crazy pivot when things really, like, something big is really blowing up. And at that point, oil might be down substantially. Like, yes, oil can fall to like $30 or whatever during a massive market crash. And that means mining stock companies can drill, and I look at royalty companies a lot as well because they don't have overhead, but they'll be massive 10 and 20 baggers like real quickly in a couple months in the mining sector, because they're going to be really beaten down after the market crashes as well, like more so than they are right now. So it's like buying at a 95% drop. Alright guys, go to my website, links below this video, go to my free chat groups, go to my Twitter, share some stuff and like them. I'd appreciate it. I'm going to make a new one. I'll announce it next video. And leave anything in the comment section, it helps. And until next time.